You know the U.S. apartment market is hot when even the Inland Empire, a poster child market of the last bust, is posting tight occupancy rates and big rent growth, even despite some persistent headwinds at play. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons, the Riverside San Bernardino update. It's been a long time coming, but the Riverside San Bernardino apartment market is back on the nation's rent growth leaderboard, and let's start with that. Same-store rents for new leases jumped 4.4% year over year through Q3 2014. Not only is that a long-time high for Riverside, but it's also, and get this, only the second time in 8 years that Riverside topped the U.S. average for year-over-year rent growth, just 2 times in 8 years. And it's been fueled by solid hikes in most submarkets and product segments. Not coincidentally, apartment occupancy is also tracking around 8-year highs, occupancy at 96% as of Q3, up 90 basis points year over year. And looking at that chart, you could see just how long it's taken to get this one back up to par following a period of substantial overbuilding of apartments and single-family homes in a market badly hit by job losses in the downturn. And speaking of jobs, Riverside isn't out of the desert yet, but it is showing some solid momentum, adding nearly 34,000 jobs, growing 2.8%. Not a blistering pace like we saw prior to the downturn, but it's a good growth rate in this environment, and it puts Riverside on pace to fully bounce back to its pre-recession employment peak levels by late 2015 or early 2016. So we're still about 40,000 jobs or so to get out of the hole, and that's a reminder of just how badly this market was hit. On a national level, we've already returned to pre-recession employment peaks, but Riverside is still about 18 months behind in the recovery process. And the other big headwind for the Riverside apartment market is the massive stock of single-family rental homes. Investors, big and small, bought up a lot of houses once home prices really came down in the recession. According to census data, single-family rentals now make up 19% of the total housing stock in the Riverside San Bernardino area. That is up from just 13% in 2006. And that's a huge increase, one of the biggest nationally. And while in most markets we tend to downplay the effect of single-family rentals just because of demographics, you're looking at typically a different demographic renting single-family houses versus apartments. In Riverside, it is a big deal because the demographics here tend to tilt towards single-family. And one key metric to show that is the average household in Riverside includes 3.3 people, which is well above the U.S. average of 2.6. And larger households tend to obviously translate to single-family homes. So given these headwinds, can the Riverside apartment market sustain the momentum that we've seen of late? And it's certainly helped by the solid job growth that we've seen of late. Another tailwind is that there's very little construction occurring right now on both the multifamily and single-family sides. So in the short term, that should allow apartment fundamentals to continue to remain in strong shape. But long term, especially as construction comes back to the market, we think this one reverts back to being an underperformer relative to the U.S. averages. And that wraps it up for the Inland Empire. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.